Gold traders, and welcome back to another Market Insights video brought to you by Orbex. We're looking at gold today, particularly after Friday saw quite a ascent in the gold bullion, in the yellow metal, as it rose nearly 2% on the back of what is looking like a bit of a double bottom. We'll look on the chart shortly, but we're now seeing possibly more of an upside, with the 1700 handle being probably the next target for a lot of economists and traders. So we're now seeing what the opportunities are for gold. We're seeing that the Fed apparently is looking to slow down its rate hike, the amount that it's been putting in the last few sessions of 75 basis point rate hikes. It's looking to slow down, and possibly the pace of these rate hikes is looking to actually be quite lowered in the near term as well. We've got 2 more meetings before the end of the year, so we'll see if there's going to be any more drama unfolded, obviously with the dollar versus the gold, and we'll see if there's going to be any more good opportunities in the market for us to pass on to yourselves. So let me know what you think and what you're trading on at the moment. So as I said, we're looking at gold in the near term at least. So I've got this on the daily chart with the assistance of the Ichimoku cloud. We are still in a fully fledged bear market, because from the beginning of the year, when we had the Russian invasion of Ukraine, all this conflict going on, we did see a risk aversion being noted, and gold fell quite significantly as well, amongst other things such as the Fed's aggressive rate policy. But as you can see here, a nice double bottom forming roughly around the 1615 handle. We are now pushing higher. We were going to see if we were going to break that particular level, then we'd have new lows that we'd probably look at the moment. But as you can see here, very generous day for gold on Friday, pushing higher, and now we're seeing the opportunities coming in. For me, if we pierce this Ichimoku lower border here, we'll be looking now at the next level, which is roughly 1725, but 1700 handle is a big psychological level for a lot of traders, so getting past that level will be the first hurdle in the way of moving higher at least. So this is obviously during the cloud engulfment. As I said, it's on a daily chart at the moment. Most interestingly enough, we're seeing a little bit of a bullish divergence on the RSI, and that could possibly mean if this fell a little bit lower, we'd have a significant divergence, but at the moment it just seems like a bit of a standard one, so we'll see what comes into fruition there. Just bring it on the 4-hour chart as well. We are now seeing what the potentials are intraday. I'll just bring the chart up a little bit clearer. So as you can see here, very, very choppy, but most interestingly enough, we're having some resistance at the lower border of the Ichimoku cloud. This is, as I said, this is intraday. We had this kind of false spike here, which gives me the intention that prices could actually consolidate for a little bit more until we get to this kind of area here, a few more hours, and then we'll see possibly the direction that we're going to be going through there. With gold, it is always obviously bouncing off the back of the dollar, so we're looking at the next move on the dollar. We've got PPI and CPI data coming through, GDP data this week as well. So we're just seeing what is the next signal for the dollar, and hence the gold, as well as we see this risk aversion really play out in a big format as well. Now, we can't look at gold without looking at oil. Oil, on the other hand, it has had a bit of a rocky road. We'll just put it on the daily chart again. And at the moment, going kind of in tandem with gold at the moment, we are seeing in a fully fledged bear market, a slight correction here, but heavy resistance at the lower border of the Ichimoku cloud, roughly about the mid to high 92 range. And now we're seeing prices starting to fall even lower here. So as you can see here, fully fledged bear market again. Will we get another V-shaped recovery for bears at least, as we look at the next bottom, which is roughly about the $76 range. So we've got a little bit more to go, $7 or $8 downward trend, which isn't really out of the ordinary in a day. So we'll see if that comes into fruition as well. But very, very big trends here, very obvious trends at the moment. So we'll see if that has any bearing on the next move for oil as well. If we look at the 4-hour chart as well, what we're seeing at the moment, as I said, this V-shaped recovery for bears at least, we're just waiting now. We're slightly consolidating on the intraday, so we're now seeing possibly a move to as you can see, this slight channel here, possibly a move here. We'll see the next level on this Ichimoku cloud. If we can break this lower border, have cloud engulfment, then we can possibly see another leg to the upside to these recent highs, roughly about $93, $94. However, the bias is to the downside at the moment. I'll just remove all these drawings, so it's a little bit easier to comprehend. And as you can see here, after this slight consolidation, we could see another leg lower. So it will be a big swing on our next signal if we can get this upside momentum to $94, or if it's going to start collapsing roughly to the mid $70 range. So that will be very, very interesting to see. So let me know what you're trading on and what you're thinking is your next step for gold or oil if you are trading on these commodities. And this video will be brought to you by Orbex and posted on our YouTube channel. So feel free to add any comments and we'll speak again tomorrow. Bye for now.